I want to talk about my favorite stock buy in the last year. And it's not just my favorite because it happens to be up 125% in about 12 or so months, but also because of the story and the conviction and the due diligence that I had to do in order to find this trade and then back up that trade in what was a pretty big roller coaster of emotions in this buying process. Because I was looking at my portfolio and I saw the big numbers here, and I was just thinking, like, I was relishing the feeling of being up 125%, because when I bought this stock and then bought more of this stock, it felt like I was going against the grain. It felt like, why is no one seeing this opportunity? And I just really had to rest on my due diligence and my conviction in this company and the numbers that I saw, and it panned out in a huge way. So I wanted to put this video together, not to brag, not to say like, oh, look at me, 125% returns, but to explain the thought process that I took with this company and the conviction that I had to have in order to really set the returns to the next level. So the company that I bought into was Nucor. Is Nucor. I still own it. And they are the definition of an unsexy, uncool company. They are the largest steel manufacturer in the country. They do both regular steel plants and what's called mini steel plants. So it's not a meme stock. It's not a tech stock. It's not anything inherently cool or even talked about. Even on current day, with the fact that they are at record high stock prices right now and have very, very solid dividend yields, they're still not talked about. And they definitely weren't talked about a year ago when their stock was far, far lower. And I have taken an absolute journey with this company. So this is what happened. Let's just pull up their stock price here. This is the 5-year. You can see that it was kind of decreasing from 2018 through 2020. And then I ended up making my first purchase around here. You know what? I'll put up on the screen my actual purchases here. So you can see my first buy was at $53.89 per share, 18 shares. Unfortunately, I didn't buy more at the time. But then if we pop back over to the computer, we can see all hell broke loose and this thing tanked down to $30. Actually, if we go back to my screenshot here, I actually bought in at $29.44. So what happened, so I bought in at $29.44. I more than doubled the amount of shares that I held. What happened was, this company had what seemed like a very attractive valuation in January of 2020 at around $50. And I was like, I did all the due diligence. I'll explain exactly what I did in a second. I did all the due diligence. I was like, you know what? This seems like an amazing value. Let me go ahead and buy some. And then the pandemic happened and this thing dropped. And this is by chance. I happened to buy at the very lowest the price was in the entire year. I more than doubled my position because I bought in, and remember, at $29, and on Google it doesn't even show that it went down to $29. So that timing was lucky. We have to admit that. But in order to do that, it was stressful. I had to have so much conviction in my due diligence and the fact that, hey, this just seems like a much better deal than it was even a few months ago at like a 40% discount. Because there was a period of time where I was looking at my portfolio and it was like negative 40 or 45%. And it's tough to hit buy when you're seeing those numbers. So I really had to rest on my due diligence, and I'm glad I did, because now we can see this thing has skyrocketed from there and is producing a solid dividend. Now, how did I find this company? Every single company that I do a valuation on that isn't like a tech growth kind of company, if I'm just trying to find a company to add to my portfolio, get some solid returns, I start out with this stock screener spreadsheet. Also, if you want more information on my stock buys with buy alerts, and I'm going to start doing private live streams, make sure you join my Patreon. We just started this. You can be one of the very first patrons, but I'm going to put a lot more things on there that I can't put on YouTube. So consider joining that if you're interested. So I start out most of my searches with this stock screener spreadsheet, which I'll have in the description if you want to download this for yourself. It's a bit of work. It's a little bit manual what you have to do in order to find this, but I start with these 5 major criteria and I throw it over in this actual stock screener. In this case, I also added in the return on equity. I added over 15% because we had like 2 pages and that's just too many to choose from. So I narrowed it down by adding that, but those other 5 criteria or so are in here. And this leaves me with 6 companies. So typically I'll start with that, and then from there, I'll take a look at those 6 companies, and really depending on where the market's at, This can vary from having anywhere from 50 companies to take a look at to 2 to take a look at, because usually I try to focus more on just the US. So right now there's 2 companies that I would ideally take a look at. If I took out this and left it to any, then it gives you a few more options to analyze. But last year the market wasn't quite as hot, so I had a few more options with these higher criteria. So I took that, and I really narrowed the list down to about 6 companies. And then with those 6 companies, I spent a lot of time. You guys know how much time I spend on due diligence. If I'm going to put my own money into something, you bet I'm going to spend some time figuring out that it's going to the best place possible. So then I take all of those companies and I go over to this stock screener and I try to determine whether they have a competitive advantage or not. Let me make this a little bit bigger. And I do that by entering in all these ratios, and then I compare that to competitors. So with 6 different companies, I compared that with their competitors, and I determined that Nucor in that case was the best choice of the bunch. So comparing them to their competitors, they had reasonable amounts of debt. All their ratios were just as good or better than their competitors. And they're a large player. They're the largest player in the steel industry. And it seemed to me like it was a no-brainer. The valuation made sense. They were selling at a discount. They're producing cash. I couldn't find a whole lot that was wrong with this company, and I was willing to dive in. But that's only part one, because when you dive into a company, you hope that it just starts going up, immediately. But that doesn't always happen. Sometimes it takes a while for the market to catch up and to figure out what exactly is going on with this company, for that weighing machine to kind of figure itself out. And this is where you really need to learn how to be an investor. This is why they say for most people, you're better off just buying into an index fund, even if you want to buy into like a high growth index fund. So you don't have to worry about this kind of thing, because sometimes you'll have a high conviction stock and it goes down. And then you think, oh, what do I do? And a lot of people, they end up selling or they end up complaining because it's not doing immediately what they want to happen. So the price went down dramatically. Like I said, it went down 40 to 45%. I'm looking at my portfolio. I'm like, okay, this thing is major red. What do I do? Do I sell? So I look back at my research, and this is why I think it's important to also do your own research. So then you have something to look back at, take a look at your notes and be like, okay, there you go. Also, something I'm going to start doing on the Patreon. Whenever I put together a video doing due diligence on a company, I'm also going to post my notes, my actual notes, to the Patreon. So then that way people can keep those notes and add to them and reference them or do whatever they need to do with that. So I'm going to do that in the future as well. It's something I'm pretty excited about. So I take a look back at my notes and I'm like, okay, none of these things none of the reasons why I like this company have changed, but the price has gone down. So what do you need to do? You need to buy. So I more than doubled that position, and then I'm hands off, Whatever happens at this point happens. Unless you have more cash to deploy, then maybe you could buy some more later, however you want to do that. But then I'm hands off. I left it be, and that has left me up 125% from the time of purchase. And that's why I'm so excited about this trade, because not only did it do extremely well, but it has all these other criteria that just kind of like made me proud to make the decisions that I did. It was a contrarian buy. There was no one talking about this. I don't think I found a single article saying like, hey, buy this company at the time that I bought it. I had to double down on my conviction, losing 45% and then doubling down. And now looking back, I could have bought my entire position at that high $50 price, and I still would be totally fine, because right now it's at $92. So I still would have an amazing return even if I bought back then. But the market has caught up and figured out what I figured out, which, wasn't any kind of secret. It was just taking a look at ratios and comparing it to competitors and seeing if it seemed like a solid company, something that literally anyone can do as long as you can do, basic arithmetic. It's just a matter of time spent doing this kind of thing. And really, these are the kinds of investments that I love. They're not cool, so they don't do as well, when I talk about it on YouTube. They're not these super high growth companies, but they're the ones that you can just root your portfolio with because they're stable, they're cash flowing. I mean, this company was founded in 1940. It's extremely profitable, dividends every single year. It's growing, and that's exactly what I want in a stock buy. And I thought this was more than worthy to make a video about, and just something that I'm excited to talk about. So yeah, I'm just really excited about this one to kind of just show that these value plays can be exciting. Like, Like, don't try not to get too lost with the 200, 300% returns that some people are seeing with their wild bets, sometimes 1,000% returns with wild bets, because it's good to root your portfolio in these stable returns and then maybe have some speculation on the side. So that's going to do it for today. Make sure you check out the description, join the Patreon, grab some free stocks with Webull, grab some free crypto while you're down there. I'd like to thank you so much for watching, and I hope you have a profitable day.